I believe there are 4 different sleeves or a multi-strategy approach Prism Hybrid Long-Short has adopted in its endeavor to deliver returns in a risk-adjusted way. Can you walk us through these 4 strategies?
Yeah, so eventually when you look at our portfolio, you will see that the entire investment are segmented into 4 strategies which we call as sleeves. The core of it, which will be, is something we call as collar strategy. Now collar strategy is nothing but we do a covered call, but to minimize market risk on the covered call strategy, we go ahead and we buy put to minimize the market risk on that particular covered call strategy. So that will be one of the core strategies.
So basically you're protecting the downside risk by buying puts, right?
Yeah, in a covered call strategy, you are always going to be exposed to market share prices of the underlying stock. Now, if you buy a protective put against it, you minimize exposure to those volatilities for the investor. That's why we are doing collars and not a covered call strategy in this.
Interesting.
And the next strategy which we would have is something which we call as merger arbitrage opportunities. Now, this again is a long gestation strategy for us. Now, merger arb, if you ask me, is nothing but if A company is going to acquire company B, and once the swap ratio is announced, which generally happens once all the approvals are in place, what we do is we go ahead and we buy the stocks of company B, which is the company target company, and we go and short the acquirer company. And over the course of the merger, it might take 9 months to 12 months to materialize. Depending on the swap ratio, the prices will converge. And generally we've seen very attractive return proposition of something of this in nature, which again is opportunistic depending on the mergers in the market at a given point in time, but this again would be part of our core strategy.
Interesting.
The next sleeve which we have is something which we called as hybrid, which comprises both REITs as well as InvITs. Now REITs and InvITs have gained relevance over the last 4 to 5 years as something which is part of any portfolio allocation for an investor, because we've seen very good opportunities in REITs and InvITs over the last 4 years with very attractive return. So this will be core for our strategy again, and this is nothing but what we are focusing on, a high dividend paying kind of an exposure to meet our expectation from the fund.
So basically a yield play is what you're targeting in this sleeve for REITs and InvITs.
Yes.
And I believe off lately there are a lot of private REITs and InvITs now becoming public, so that gives you more liquidity or more opportunity to participate.
Yes, currently the challenge with REIT and InvIT exposure is liquidity, but given the significance this market has gained over the last 4 to 5 years, we expect a lot more private and REITs and InvITs to get into the public space, and that will open the door for more opportunities and more liquidity.
Interesting.
The final sleeve which we have will be the fixed income stream. Now here again our focus is going to be on debt exposure, which is going to be minimum 25% of the portfolio, because that's what is mandated by SEBI in the hybrid long short fund. And the focus, as I said, is going to be reduce risk as far as possible by concentrating on highly liquid and very high quality government securities and debt.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.